But to finish it off, I just want to actually I want to get your thoughts on Bitcoin because it's coming down right now. Ooh, it's coming down. Yeah, I'm gonna pull up my screen. So I don't know if you can you see these arrows clearly?
Yeah.
Okay, so what I did was like early in the week. So I should start off. So back in July 3rd, I was talking about this even before then, but I posted it on
Yeah.
July 3rd. I was like, because everyone was calling Bitcoin was saying that Bitcoin was creating a head and shoulders, right?
Yeah.
Let me get rid of this garbage. So this is the right shoulder, the head, and this the sorry, the left shoulder, the head, and the right shoulder, right?
Hmm.
At about this point, at about mid-June, I was like, this doesn't look like a shoulder to me. Like I'm trying to read the price action, and I'm like, this is not the same emotional response as you see on this shoulder. It's just not, right? And
Hmm.
so what I did recognize was this pattern. Very few people recognize it, but I do. This at the time was only this much is formed, but I already it was this piece right here. This is called a fulcrum. It's a fulcrum bottom. And so that's what I saw here. It's a very rare chart. You usually see it in commodities like corn. I don't know why. But
Hmm.
so that little sell-off we had there, I said that was going to be a bear trap, final bear trap. And I said this a month ago, right? And look, and Bitcoin had that little bear trap and then boom, spiked right up. So what I did was I took a position here. I bought the short. I bought it at 30,000 and ended up going like to 29. So it like dropped to maybe 2.5% below my entry point. But I didn't set a stop either, but maybe I should have. But I was pretty sure the fulcrum is playing out because whenever everybody calls for the same thing, it's like that example you were saying from the book. It's like whenever everybody's calling for the same thing, I'm like, I start to get a little suspicious,
Right.
right? So everyone's calling for head and shoulders. We're going to 25,000. I'm like, if everyone's saying it, I got a feeling it's not going to happen.
Mhm.
So that's why I took that long. I got in like $10,000 position. I just started playing it up. And so I think we were talking about it that day too. So that's me getting in long. And I exited almost right away. Like it went up 10%. I exited right away. I think where I was talking to you guys even on the chat during that time, I said I stopped out. And
Yeah.
then I was watching the chart closely. I'm like, you know what? This thing looks like it has legs. So I bought back in again, rode it up to I think it was 30, I think it was 38.5. I sold again. Then I bought back in at 36, and then I finally stopped out the other day. This was actually my target. My target was just over 42,000,
Okay.
but I woke up the other day and it hit my stop. I did set a stop, 38,500, and then it was very much because of your influence that I was like, you know what? I'm gonna be disciplined because time was that if I was this successful, I probably would have been a little arrogant. I would have jumped in on this play.
Right.
But I didn't. I was like, and I'm proud of it. Like I don't care that I missed this 10% move. I actually very proud that I didn't jump back in because this could go horribly wrong,
Yeah. Yeah. It's a
right?
lot less
So
stress when you wait for the really good setups.
yeah. And the way I see it is, you know what, because this rally here was surprising, I think it caused a lot of people to get in here. And that's what I was thinking. Like now it's gonna be a bull trap, right?
Right.
Did a little spike, got rejected again, and now it looks like it's coming down.
Still
So
front side though, right? Like until it breaks that line, it's still front side.
yeah. I think it's coming down though. It's getting very close to it.
Mhm.
So, yeah, I don't know what your let me pull it up on the bigger chart, but I don't know what your thoughts are in the from daily perspective. That was the 4 hour. This is the daily.
Yeah. I like it better on the 4 hour. It's a little easier to see the
Oh, do
actual
you?
pattern.
All
Yeah.
right, let's go down there.
I'm more of a shorter term guy.
Yeah,
Yeah, like it's
even the RSI is diverging.
yeah, it's still front side overall. Like if it broke below that front side, then you'd probably be coming down to like what is that, maybe 36.5 or something like that for your first test. Yeah, somewhere
36.5. That's what
somewhere
you're
in
saying
there.
here.
Yeah.
I think incidentally, where's my orders? 36.133. I think that's where my order was.
Okay.
36. I got one at 36 and one at 33.
Yeah.
Yeah. So my thought process is so I called capitulation a long time ago. It was a little ballsy, but this is when I called capitulation. This was back in May, and I wasn't sure, obviously, but I saw the data that $80 a month was worth chain, and I was just waiting for this. So I feel like we may not be out of a bear market. My theory is that we've found a bottom, and now we're going to do a little price discovery to the upside.
Mhm. That'd be good
So
though, man. Like if it holds over like 30 and it just kind of like goes sideways for a while, like that'd be really good because that would give it a lot of time to base and give it some support and start moving up again.
yeah, that's what I'm thinking. Like it's because my view is that I'm gonna pull it on daily, but my view is that everybody that wanted to sell, all the loose hands, all the fear guys sold. They had 3 months to sell. They had 3 months to get out of their positions.
Mm-hmm.
Right. So as far as I'm concerned, the supply is not there anymore. So, well, not until we reach this area. But as far as I'm concerned, the supply is not going to be here, and it's just a question of demand. Is there demand?
Well, the thing too is like if you think about it, like if we hold in this kind of channel that we're in right now, like the longer that we hold there, in my opinion, the longer the guys that bought above it would be more comfortable and not sell into pops too, right?
Oh, is that what you're thinking?
Yeah, because I mean, if you're just let's say you bought it 55,000 and it's just trading between 30 and 40, 30 and 45 for a year or a little bit longer. Like to me, like if I was like a long term investor, then I'd be sitting there and be like, oh, okay, well this thing's actually kind of holding up. And then if it started to come back up, I wouldn't be scared and saying, okay, like I got to get the hell out of here now. I'd be like, well, no, it's holding up now. It's holding a solid base, and now it's starting to creep up higher. So maybe I'll just buy more, right?
Interesting.
That's why Bitcoin I think has always been so tricky is because it has such like big erratic moves and like you're kind of playing this war with guys who just trade it versus guys who want to invest in it. But like the guys that want to invest in it, they don't want this kind of volatility, right?
Yeah. Like, well, yeah. I mean, for most investors, they'd love to see a straight line.
Yeah, exactly. Well, I mean, you look at something like this and it's like, 60,000 and then it drops down to 30,000, like, you lose 50% and like what, a couple months kind of thing. Like that's not very good for someone who's like buying this as an investment with a lot of money, right? But that's what I mean. Like if it kind of holds in this channel and it instead of having these big up moves and down moves, it would kind of get like a nice solid support level going on, and then it starts creeping up higher. Then I think that'll ease a lot of the tensions in the guys that bought up above where we're at now.
And see, like, there's clearly support right around this level here was at 20, like, say, call it 30,000. Like, this is where a lot of the buying has been happening. Clearly, look at all those wicks.
Yeah, we've hit it twice too, right? They hit it back in the beginning of the year too.
And so this is what I mean about when everybody says it's going to 20K, it's going to 25K, it'll be 28K. There's going to be some portion of people out there going, okay, if that's where you think, or you know what I mean? Let's say I'm going to take
Mhm.
that trade, right? And so it shocks these people that it doesn't go there.
Yeah, that's why I hate
So
shorting into weakness, man. Like I never short into weakness. Like if I see a level break, I don't get in when it breaks. Like because it can just trap you so fast, and then your risk is so high. Like on this one, like I know I talked about it last time, like the smaller risk. But if you look at like big picture, I mean, if you were to get in at 28,000, like you'd basically be risking up to 40. Like you'd have to risk the top of that shoulder, right? If you're looking at like the full picture, so that's a huge risk, right?
interesting.
That's why
Where
I
would
like
you target? Where would your target have been if you
I don't
like
I
what
don't
were
like
what,
head and shoulders that much. Like it's not really like one of my favorite setups. I really don't use it very much. I just use my horizontal lines and I use my trend lines to determine front side or back side, and then I trade based off the horizontal lines. But like I'm always trying to short into stuff. I hate shorting like when stuff breaks because it can trap so easily and your risk reward is terrible. Like if like let's say Bitcoin broke below 28,000, like if I wasn't in, I'd short on a pop up to 28,000 because then I know I'm right at the top, and then I know if it gets over 28 and it sits there, then it's reclaimed, and then I can get out and have a really tight risk. But like if I just short into that weakness, like maybe it just maybe 28 breaks and it goes to 26 and it comes right back up and reclaims.
so I want to create a little visual for the viewers. What you're saying is you'd rather have it break down and then pop back up, say here, and it
Yeah,
gets
and
rejected, and then that's where you'll short.
yeah, 100%. Like if I like back in May there when it broke right down, like if I saw a good entry on a pop up to like 40,000, I might put a starter there and then just kind of trade that channel. Like, I might take like, I don't know Bitcoin numbers or whatever, but let's say it's 100, like let's say I have 100 shares or whatever, for example, like I might put on 100 shares and then I would cover 50 at the bottom and then short again at the top and then cover at the bottom and just kind of like work that channel all the way along. And then once it broke, then I might add to say 150 because I already have a higher starter. So that's when I would add on a break. But I would never just go in like first shot on a break. I don't trade like that because the risk reward is always terrible.
Yeah, I mean, look, you would have had a like 30% in what's it, 2 weeks? 30% move in 2 weeks.
Yeah, yeah.
But
So
but to your
like,
point, sorry, go ahead.
no, I was just saying like that's why like you really want to look. You don't want to chase stuff down because if you look at this like you've been selling off from 40 down to 29. So now if 29 breaks, say like 28's the level or whatever, that breaks and you get short there, like you have to think in your head, there's already a lot of guys who started shorting at 40. So like they'll be covering into that wash. And that's what I do a lot of the time. Like
Yeah.
I'll hit a bounce and then I'll look at a level. So I'll cover just above that level and then I'll hold another amount of share. Like let's say I cover, half of my position just above the level, cover maybe like a quarter on the level, and then I'll cover the remainder of it like just below. Cause like a lot of the times you just get like a quick wash and then it might come back, it might reclaim. Or if it trickles off and falls all the way down, then maybe I'll hold on like a tiny position for that. But it's a lot safer way to play. Like if you try and chase that weakness, it's really risky.
Yeah, to your point, like look at this. This is a 1 day candle. It sold off 32% in that 1 day, but it bounced back up 23%. So if you sold anywhere here, like you're
Yeah.
fucked.
Yeah, exactly. But even there, like even where you got in long, right? Like I mean, if you had a shorted that on that bottom, thinking, oh, okay, we're closing pretty strong below this level, and you get short right there, then immediately reclaims. Like let it tank down to $22,000 or something, and then bounce way back up, and then you just load it on the top. Because then you're basically looking at you're looking at 28, 29, and okay, if it gets to 30 or 30 and a half, then you cover because it's reclaiming that level. But at least you can get in full size and you know that you're coming up into a wall, right? You're not just kind of like fluttering below a support level.
Yeah. And this is, I think, it's important about finding an edge. So the reason I pay for the on-chain data, and like it was strange when I went long here, or before it hit that order, when I set that order, I had almost no nerves
Mm.
because it wasn't a gamble. Because I was looking at the on-chain data, so I already had this pattern figured out, and I was like, this might happen. But I looked at the on-chain data and gave me confirmation because during this move right here, it was hilarious. Every spike, every spike down, every slam down, I saw the short positions on the spot market, and every time it slammed down, instead of covering, these guys added. So the short positions were just going up, and I even put it on IG. I was like, if somebody was going to engineer a short squeeze, this would be like a good setup,
Yeah, yeah,
right? So I caught that there, and that's why I played that move, right? So it's like important to like have your thesis and have a bunch of things to kind of confirm it too, because I'm sure when you play your patterns, you're like looking at a bunch of different.
yeah. Well, like the best way to look at it is to always look at it from both sides, like you were just saying there, right? Like you're looking at the shorts, how they're coming in. You're thinking this would be a great short squeeze. So then when you see that breakdown below the level, it closes below the level, and then it immediately comes right back up. Like you're thinking, okay, this is a great long signal, right? So like you got to look at both sides of the trade, and that's what both of us do. Is like I do the same thing. Like you've seen my trades where like I get stopped out short, and then I'll buy long immediately, and I'll make my loss back and then some because I'm thinking, okay, like if I got stopped out short, then I know there's a lot of people that aren't going to stop out because they're not that smart. And it's going to squeeze them out. So I'm going to ride this thing long, and I'm going to take that profit, right?
Yeah, yeah. And that's like a huge reason why I didn't jump back in, because I had the opposite thought this time. I was like, well, if there was ever going to be a bull trap, get a bunch of people's hopes up. We have what? This is like 9 straight days, 10 straight days of, green candles. I'm like,
Yeah,
if somebody's going to get overconfidence now, and look,
yeah,
lo and
yeah,
behold.
yeah, for sure. Yeah,
So
that makes sense. That's the psychology of everything. That's why I always say you just look at both sides, like, and you just follow the path of least resistance. Like, what's going to be the easier trade? Like, who's getting stopped out, who's getting screwed over, and you just hop on the other side.